Hello folks, this is Tony Drake from Drake & Associates with an educational economic update for December 2017. In this month's video, I'll discuss some major headlines that influenced markets in November. I'll also provide some insight into what these developments could mean for you as an investor. Please stay tuned at the end of this video for a required disclosure statement. U.S. equities had quite a month in November. By the 30th, both the Dow and the S&P had hit all-time highs, with the Dow rising above 24,000 for the first time ever. The S&P 500 also marked its longest run of monthly gains in a decade. Throughout the month, we received a variety of economic updates that helped support some of this performance. As October's data came in, many reports indicated that the economy is growing. For example, the housing market showed strength as existing home sales beat expectations. The latest reading of new home sales also came in far above the anticipated results. The numbers were higher than they've been since 2007. In addition, consumers spent more in October while their incomes rose as well. This growth should be positive news for the economy. Consumer spending comprises about 70% of economic activity, so higher spending can mean stronger economic growth. In fact, the latest reading of Gross Domestic Product, or GDP, revealed that the economy is already picking up speed. During the third quarter, GDP grew by 3.3%, the fastest pace in 3 years. Experts believe economic growth may slow slightly in the fourth quarter, but they still think that GDP readings could be at 3%. How much consumers spend during the holiday shopping season will largely impact the last quarter's growth. With low unemployment and increasing incomes, we could experience some higher spending. Looking back on November, consumer behavior and new economic data are not the only topics that move markets. One critical detail is tax reform. The House and the Senate each released their own long-awaited bills, and the market has reacted to key differences between the two. In particular, the Senate's proposal to delay corporate tax cuts until 2019 contributed to a stock sell-off earlier in the month. Then by November 30th, the markets hit record highs as Senator John McCain's support of the bill seemed to increase its likelihood of passing. As of now, no one can say if the House and the Senate will be able to come together to create a compromise tax bill they can each pass before the end of the year. Expectations for tax reform have pushed stock prices up in the U.S., but uncertainty over whether the promised changes will actually happen is affecting both the market performance and consumer sentiment. As the tax debate continues, December should provide a lot of new information for the markets to digest. Also, many analysts expect the Federal Reserve to raise interest rates this month. This would be the third interest rate increase in 2017. We'll continue to monitor these and many other economic details in December. And we always welcome your questions about anything covered in this video or anything else that you may have on your mind and you'd like to discuss. That wraps up our educational economic update for this month. Please visit the website at wealthwisconsin.com to learn more about our upcoming workshops and educational opportunities, and be sure to listen to our Retirement Ready show on AM 620 WTMJ on Saturdays at 1 o'clock. Once again, this is Tony Drake with Drake & Associates signing off for the month of November 2017. Please remember that nothing we talk about here is a recommendation. If you'd like to discuss your personal financial situation, please give us a call. We're happy to talk. Thank you and happy holidays.